What's up, guys? You're welcome to another live trading session from me. And in today we are buying gold, as you can see on the screen. If you are joining us for the first time, please, I am very grateful. I'm happy for you to join us, and I just want you to subscribe to the channel. In a few moments, I'll be breaking down my strategy and the purpose why I'm buying gold. Don't forget, last week Friday was NFP, and I'm still holding my NFP positions. These are my NFP positions, around 600 pips in profit. And today I added fresh positions which are running. Okay, earlier on it was around 200 pips, and currently is around 130 pips in profit. That's my today position. So it's still a win-win on a win-win on every side. So if you're a returning subscriber, I'm very happy to see you here back. If you're a new subscriber, please subscribe to the channel, drop a comment, like this video. It's going to help the algorithm to share this video to a lot of traders. As you can see, we are just a new channel here out here trying to grow on YouTube. She's trying to test the YouTube algorithm to see how everything is playing. So I will appreciate your support, and the only way you're going to support us is by actually subscribing to the channel. So let's look at the screen and check what we'll have here. At the moment, I am expecting price to actually pull back. Take out this trendline liquidity, and let's see the reaction we're going to get in this, what's it called? In this fair value gap here, which is in the form of this inefficiency, which is in the form of fair value gap. I talked about this inefficiency last week Friday. I said a lot of things about this inefficiency, and what I said was I will want to take another buy in this huge candle. Let me zoom out so you can see. I want to take another buy in this huge candle here. So the reason is because price seeks two things: liquidity and inefficiency. So this is a trendline liquidity here, and this is an on-field. A lot of people call it unmitigated, so that's still right. Unmitigated inefficiency. So, and I know for sure that price will definitely pull back to rebalance structure. So this will be a nice place to look for bullish rejection. This week, what I'm focusing on is bullish on gold, because this trade is a long-term, buy, not just a short-term one. It's a long-term. And I've been trading gold for almost 2-3 years now. I have been trading forex generally since 2012. That's for the past 13 years now. So it became profitable after 8 years of blowing account and all of that shit. So that is that for that. Ever since I became profitable, I discovered that profitability is not a stage in the market. It's a continuous process. A profitable trader can become unprofitable when he starts abandoning, the rules that took him to where he is at the moment. I am going to move my stop loss away from that place, because that's like putting your stop loss below liquidity. It's going to get taken. Even if this trade starts running in red, I am still very cool. Very cool, man. Very cool. Because I know that my profits and my capital will definitely be enough to, to carry me throughout the trade. You know what I'm saying? So that's it for that. So I will want us to actually observe something that is happening in gold at the moment. I want us to observe certain things that is happening in gold. Watch how price is reacting to certain inefficiencies. There is this strategy I want to teach. It's called the liquidity and volume strategy. It works very well with the market algorithm. It has a win rate of 90%. That means out of every 100 trade, you're definitely going to win 90 and just lose 10. About that strategy. So I want to share the link of this video to my community so few people can join. Yeah, man, we're running in profit, man. Wow, did I said 600 pips at the description? Currently, we're running around 700 plus pips on our NFP positions last week Friday, and today position we're running around 100 and something. So, nevertheless, this is a nice win. This is a nice win. This is a nice win. So we took the position here after price created this, you know, higher low, higher high, higher low. After price broke away from this range, I took my position on the pullback, and I was expecting around 4 to 5 bullish candles in same direction. So, but fortunately, we saw just 3, and price is pulling down. And I'm very, very okay, very, very okay. Even if price should pull down, clear this trend liquidity and tap into this inefficiency, I'm very, very okay. Very, very okay. A strategy that is built on percentage is something you shouldn't doubt, because it is built on probability and percentage. So you don't know which one is going to play out. All you need to do is just look for that setup with same market parameters, same market condition, and just rinse and repeat. You know what I'm saying? So I'm sharing the link. Just wait and let's see what happens. So let's see how it goes. Running around 700 pips on last week NFP position, and today position running around just 100 pips. Nevertheless, let's see how it go. Please, if you are just joining us for the first time, I will want you to subscribe to the channel. This is how you can help us as a new channel. As you can see, last week we're around 70 subscribers, and today around 90 something. So just get us to 100 subscribers thereabout. Let's see how we'll go. The goal is to get to more traders. The goal is to reach more traders. So the goal is to get, and if you like this video, definitely the YouTube algorithm is going to suggest this video to other traders to watch and also learn 1 or 2 things. I'll be breaking down my strategy in few minutes. If you are a returning subscriber, I appreciate you. Thank you for returning. Thank you for joining back. You guys are the real MVPs. You know what I'm saying? So the markets, I just want you to listen to this thing now. I'm about to say. I want you to listen to these two things. This might be it seeks liquidity and it seeks inefficiency. My strategy is built around liquidity and inefficiency. My strategy is built around liquidity. So you must first of all understand that there is liquidity everywhere in the market. And if you ask me what is liquidity, basically where a lot of people will put their stop loss, there's liquidity there. And we're talking about double tops, double bottom, previous high, previous low, triple tops, and trend line. Okay, now let's say for example, let me zoom out. These two candle, this bearish and bullish candle, is a bullish formation. So if you buy at the close of this bullish candle and put your stop loss here below this bearish candle, and probably your take profit is this high, or your take profit is open, this place you put your stop loss here, there is liquidity resting here. Now let's come to this place again. The market pulled back into this region. We saw another bearish and bullish candle, which is a nice bullish formation. Let's say you buy here and you put your stop loss below here and you target this place. Remember, your first stop loss was here, another stop loss was here. Let's say you hit your target here when price at the close of this bullish candle. Definitely you hit your take profits here. Let's assume for the third time you placed another buy here, which I did, and your stop loss is here and your take profit is open. Let's say you've closed after making around 200 pips, which I made a few minutes ago. Now what I'm trying to say is that points number 1, 2, 3, there is liquidity resting resting below these places. Why? Because a lot of people will place their stop loss. It is the normal mindset of a trader to place the stop loss few ticks below a former low or few ticks below a former high. And now what does the market do? If this entire trend is going to be a long-term bullish trend, it won't just keep on buying. No, it has to clear off short-term liquidity. I'm not recording this. Now I have to start recording this. The market needs to clear out all short-term liquidity, and we can see those liquidity resting in this place here, because those that, if you bought at the close of this bullish candle, your stop loss will definitely be here. You bought at the close of this bullish candle, which is this bullish formation, your stop loss will be few tick below this bearish candle. Same thing with this place. Now it means we have a lot of money resting here. A lot of people place their stop loss here. Money. Now the market will seek it. It will clear all this liquidity inside this bullish candle you're seeing here. Now, the last week, what is an imbalance? An imbalance, when you see 3 candles moving in the same direction, and the first and last week doesn't doesn't touch, means there's an imbalance in the market. So this is a week here, this is a week here. So this is a huge imbalance here in the form of fair value gap. So the market will clear off this liquidity, tap into this imbalance, and what I'll be looking for in this place is just basically bullish rejection, bullish formation. Now they can come in any form. So the market will create rejection here. I'll be expecting a bearish. Now it will be something like this. This is what I'll be expecting. a bearish run. Oh. Then I'll be expecting the pullback into a bearish zone that is supposed to push price down. And I'll be expecting a little retracement into a bullish zone that will push price up. And once I see price close above, this initial high here, then I'll know that definitely we are about to have what's it called? We're about to see a bullish continuation. So definitely you buy, your stop loss can be here or safely at this place. Then your take profits will be this high or whatever high was created before the sharp drop. So that is what I'm expecting on gold to play out in probably in the next couple of days, because we're almost through with the New York session rush. We will not see much volatility in this New York session because of the time. So it might play out probably tomorrow or during the Asia session, but this is a playbook that I'm likely to see in the market due to previous experience and all of that. So the market seeks liquidity inside an inefficiency. It will move back to seek a minor or minor internal liquidity and fall back into an inefficiency. Then it will move up and target the external liquidity. Now, I know what I'm saying is difficult for you to comprehend because it's something you don't see every day, but this is something I see every day in the market, or let me say every week in the market. Okay, let me use last week NFP to explain something. This initial bullish run, this is the first leg. This pullback did not close below this what's it called, this first leg, and we started seeing bullish rejection here. Now this huge bullish candle closed above this initial high, so this would be a higher low, a higher high, a higher low, and we are getting a new high here, and we're trying to get a new high here. So higher low, higher high, higher low, probably a new high. Then what you should be looking for is a higher low. The higher low will clear off all this liquidity resting below this trend line to tap into this inefficiency here. So just like I said, I will be looking for bullish rejection here. Beautiful. I'll be looking for bullish rejection here. So we're still floating around 700 pips in my NFP trade. Now, if you're seeing me for the first time, I want you to subscribe to this channel, click on the like button, leave a comment. I'll be making a video about my strategy, which is the liquidity and volume strategy. It works very well with the algorithm. It has a win rate of 90%. You know, I won't say much about it. I'll be making an entire YouTube video to explain. And if you've been losing your funding account, you've been blowing accounts, this might be the only strategy you need. Let's not forget that traders complicate profitability because first of all, they don't understand the win rate of a strategy. And for you to do that, you must repeat one strategy or one setup 100 times, because percentage is rated over 100, right? You must repeat it 100 times for you to know the win rate. Not just 100 times, 100 times once, then that's a record, that's a whole data. You repeat it again 100 times with same market condition. You know, when you do it about 3 times, then you can tell yourself this is the win rate of my strategy. Probably you take 100 trades, you lose 70 and you win 30. Means your strategy has a win rate of 30%. If you should win 80 and lose 20, you have a strategy with a win rate of 80%. Now I have a strategy with a win rate of 90%. Do you know what that means? It means out of every 100 trades, I am to lose just 10. And this strategy, I've used it to pass my funding accounts, use it to make a lot of profit from the forex markets. And it's someone might ask, does it work on the lower time frame? It works on every time frame. The market is fractal in nature. What that means is that one setup can play on the monthly, the weekly, the daily, the 4 hour, the 1 hour, 30 minutes, 15 minutes, 5 minutes, and the 1 minute time frame, depending on you, depending on your ability to actually see it. And one thing about my strategy is, once you learn it, you cannot unlearn it. Once you learn it, you cannot learn it. Like I said earlier, liquidity has a high role to play in my strategy. Liquidity, and there are different types of liquidity. Whenever I see trend line like this trend line here, this trend line is a liquidity. Why? Because a lot of people sold here. Your stop loss will be here, right? If you sell here, your stop loss will be here. If you sell in this place, your stop loss will be in this place. Now, if you sold here, your stop loss will be here, which means we have a stop loss here, here, and here. Whenever you see something like this, it means the market will reverse and grab all the stop loss till this place. This will be a nice place for you to close your position, or 50 pips above this place. Why? Because whenever market grab a new high, I tend to see about 4 candles moving in the same direction. So that's just in Nigeria we call it jara, additional profit. You understand? So that's for that. Still running around 700 profit from our NFP positions. Today position here still running around 100 pips. So this is nice. This is a good result. I think I'll close just one of my position here. Yeah, that sound is therapeutic. And I might close one of my NFP position. So it's part of my risk management strategy. Funded this account with $2,000, and currently I'm sitting pretty around 5,000. Funded it on Friday, which was NFP, and at the moment, man, this is good. I like the result I'm seeing. What time frame is this? The time frame is 30 minutes. The time frame is 30 minutes. The time frame is 30 minutes. So I hope you can see it clearly. Currently, the time frame is 30 minutes. So I don't know if I can go live for about an hour, but I want to go live for about 1 hour. And if I will do that, I will have to talk about something which will help you to become profitable. Now, let me share this to you for free. If you are hearing me, please type in the comment section that I'm hearing you. I want to say this, and I don't want to just say it when nobody is hearing me. If you're hearing me, just type I am hearing you. I want to share something that I believe no one has shared to you. Now, I've been training for it for the past 13 years. Don't tell me that I don't have experience. There's experience that, now there are things I've experienced that just few people have experienced it. So I'm about to say something. If I should see someone type in the comment section that I'm hearing you, then I will continue. Type in the comment section, I can hear you. So someone said I can't see what I'm typing. But I can see what you are typing, so I don't know why you can't see it. Now, I will explain something to you now. This is it. If you want to look at the forex market every day for direction, if you want to know what to expect every day in the market, you shouldn't be looking at what's it called? You shouldn't be looking at previous activities that have happened. In fact, your focus should be, okay, I think this is the best way to say it. Your focus should be from 12 a.m. at night. Your focus should be from 12 a.m. Now, yes, the live will be posted on YouTube to watch again. The live will be posted on YouTube after once I'm done with this live. Automatically to be posted to YouTube. So now I listen to this. I want you to look at the market from 12 a.m. right? From 12 a.m. to 6 a.m. Now I'm explaining the strategy I said I want to make a video about. Fuck. Okay, let's go. I want you to look at the markets from 12 a.m. to 6 a.m. and mark out the highs and low and watch what happens during the London session. I think I'll stop here. I'll stop here. Just watch what happened during the London session. Watch how price reacts to the Asian highs and lows during the London session. I'll stop here. There is what they call, I have two different types of liquidity that plays out every London session. The first one is called single liquidation. The other one is called dual liquidation. Now, I think I will have to stop here. Yeah, man. Forest Community Trading Lab private student. I am sorry. So, just watch what happens. I'll be making an entire video about the strategy. It has a win rate of 90%. Guys, believe me, I know what I'm saying. And that was how I took this NFP trade. There is something I'll show you about this candle. You see this huge bullish candle. Whenever you see a candle that does not have a wick here, it is very, very dangerous to keep on holding your position. Why? Because it means that the market did not rebalance. It means that there is every high tendency for price to pull back to this level and test this wick, or even test this low. Whenever you see a candle that does not have, because now every bullish candle should have an opening, the low, the high. Okay, now an opening, low, high, and close. And now in this candle, we have the opening, we have the high, we have the close. There is no low here because the low will always come through the wick. It's like accumulation, manipulation, and distribution. You understand? So price will accumulate during the opening. If I want to get the low, price will manipulate down. After manipulation, you will see price will pull back into the range and distribute to clear off the opening high or the to clear off the opening of the candle. So if you see a candle that does not have a wick, now let me use the highlighter. If you see a candle that does not have a wick, it means that price will pull back, or price have every tendency to pull back into that range. So I don't know if I'm going to see that on gold. I don't know if price will pull back into this range here. I don't know. So if that will happen, then that means leaving your stop loss here is even dangerous. You understand? So because there is an on-field inefficiency here. So I don't know when that will happen, but if price should clear off this liquidity here, 1, 2, 3, 4. If price should clear off this liquidity, there is high tendency of we seeing a deep pullback inside this inefficiency. Nevertheless, our fingers are crossed, and we are running in profit. So that is that for that. I don't know if we've gotten our New York high, because every session have its high and low. The London session has its own high and low, and we've gotten our London session high and low. Let me show you guys our London session high and low here. Now, first of all, today is Monday, right? So our opening price was around here during the Asia session, around this place. So market opened here. This was our Asian low, and this was our Asian high here. So now during London session started here 6 a.m. The Asian low was around 1 a.m. Asian high was around 4 a.m. Now London session started around 6. From 5 to 6, that's Frankfurt. London session started around 6. So 6, this is London open around 6. We had our London low around 7:30. We had our London close around 12. So this is the London high and this is the London low. Now the London high actually grab our Asia high. So automatically our Asia low is still protected. We have liquidity resting below our Asia low here. And now I always tell people that, I think I'll keep that for the video I'm about to do next, about the strategy. I wanted to say something. So our London low is protected here. Asia low also protected. So there's liquidity resting below there. Price have took our Asia high. The liquidity resting above the Asia high. So now we've gotten our New York open, our New York low, our New York high. So let's see how the market will keep on going. Let's see how the market will keep on going. Let's see how the market. I want you to look at the market from look at the market as a day trader. Look at the market from every day's view, starting from the opening price. Because if you are expecting a bullish day, what you might likely see is price will open during the Asia session, price will accumulate, then you will see manipulation during the London session. Price will manipulate, take out the London low, and pull back into the range, and you'll see maybe during the New York session you will see distribution. That is what I expect mostly on a bullish day. It's like a playbook, and it happens always. So sometimes I don't even see it coming. I just jump into the market, and next thing, if I should go back and analyze it, I'll see that my setup actually played out. So once you see it, you cannot unsee it. I'll be closing today's position because I expect price to take out this high by now, and it's not happening. Price is supposed to go back and clear out this high, so I'll have to take out this position. Let's close our profit here. Beautiful. That sound is therapeutic. Now we have just one position running on gold, one position running on XAUUSD. If you're watching, just joining for the first time, my name is Emil Forrest. I've been trading Forex since 2012. That's 13 years of trading Forex. And I started trading gold specifically for the past 3 years. So I wanted to know that gold is volatile. If gold is a lady, it means she has a lot of temper. It can take you to the city today, and the next day it will take you on a free journey back to the village. You don't even need transport fare, So, but if it's not volatile, then I am not interested. I'm also trading a pair, XAUAUD. Now let me check what is happening there. Wow. I wish I can switch accounts, but I wouldn't want to do that. Um, let me show you guys the profits I have running on my AUD account. Wow. So I have around $10,000 profits running on my AUD account. Around $10,000 profits. I have around $10,000 profit. So can you see? Gege. So this I can scroll. You see, right? Oh, now 10,000. Charlie. Woo! When last did you hit TP? Let's go back to xauusd on the screen. Now I'm asking the trader there, when last did you hit TP? This is beautiful. This is beautiful. This is beautiful. This is beautiful. Believe me, guys, this is beautiful. This is beautiful. So I'll be teaching how to trade forex from scratch to pro, and I'll be posting the video. I will want you to watch it. It's a power-packed video if you are still struggling on how to be consistent, but basically for beginners, from beginner to advanced level, from scratch to pro, you know what I'm saying. So I've done this video. I think I've scheduled it already. I don't know why it hasn't gone live. So, but the strategy video is very, very important. Like I said, the name is the liquidity and volume strategy. It works well with the algorithm and has a win rate of 90%. You know what I'm saying? So that's it. You wouldn't want to miss that. You wouldn't want to miss that. You wouldn't want to miss that. Believe me. I've been wanting to make the video for a very long time. Sometimes I start in my course of making the video, I'll just tell myself, this is just too rich. Too rich to let go. Too rich to let go. I'm not done yet making money with this. But I guess that's the reason why I made this, why I created this YouTube, to help other traders. Now, this doesn't mean that I'm an expert. No, you see that 10% loss, that's in my strategy, right? It has a win rate of 90%, and that means out of 100 trade, you win 90 and lose 10. But that 10% can make you unprofitable. Now, why is that? You don't know when you're going to have 10 losses. You can have 5 in a row. Now, having 5 losses in a row does not mean that the strategy is whack. It means that you are trading a strategy built on probability. 5 losses in a row does not stop me from taking the next setup if the market condition meets my criteria. So no matter the loss I have, if I see the next setup and it meets my market criteria, I will take it. Why? Because my strategy was built on probability, and I will have a win. What does mean that the win has no effect on me, the losses has no effect on me. I should not doubt a strategy that was built on probability. So if it has a win rate of 70%, it means you're going to have 30 losses. You can encounter 10 losses in a row. 10 losses in a row should not stop you from taking the 11th setup. Now, if you don't take the 11th setup and it ends up being a win trade, you've lost 1 out of your 70. I don't know if you understand what I'm saying. Now, I think I'm seeing some questions here. Let me answer. Don't doubt a strategy that was built on probability, because you don't know when this next setup will play out. You don't know if the next setup is going to be a win or a losing trade. So you shouldn't doubt a strategy that was built. All you need to do is just to watch the market criteria, watch the market condition. Does it fit in your rules? Does it fit in the setup? If it does, take it without a doubt. You don't know if the next trade is going to be a win or a loss. You can have 10 losses in a row. It doesn't mean that the 11th trade, you can have 15 losses in a row. Now, if it has a win rate of 60, it means you're definitely going to lose 40. You don't know if the next is going to be a win or a lose, or a loss. Then you shouldn't doubt it. I don't know if you understand what I'm saying. So that's that for that. Someone said, I don't understand liquidity. Okay. I think that would be a nice way to start the next video I'll be doing, because the strategy, like I said, it's built heavily on liquidity. So I might do an entire video separately from the strategy to explain liquidity, because we have different type of liquidity. We have, as a matter of fact, I have 5 type of liquidity that plays out every week in the forex market. And once you learn this, believe me, once you learn this, it might be the missing piece. You can build strategy around liquidity. You can build strategy around inefficiencies. Inefficiencies are in the form of fair value gap, order blocks, breaker blocks. Those are all inefficiencies. So I'll be doing a video to explain liquidity and inefficiencies in the forex market and how you can build a strategy around this concept. Now, don't forget that ICT is not a strategy. ICT is a concept. Don't confuse it. SMC is not a strategy. SMC is a concept. Same with ICT now. As a trader, what you need to do is to build strategy of concepts. Order block, breaker blocks, fair value gaps, those are all concepts. Liquidity, they are all concepts. Now, as a trader, you need to understand this concept, learn it properly, look at it in the market, and build a strategy of this. So now you see someone said, I have an ICT strategy. No, the person has learned ICT concept and built a strategy of the concept he or she has learned. I don't know if you understand what I'm saying. So I will, as for the person that said, I don't understand liquidity, I will be doing a video to explain what liquidity is. And if you've not subscribed, please, I want you to subscribe to this channel. Please, I want you to subscribe. This is the only way you can help me to grow on YouTube. And the goal is to reach more traders. The goal is for their YouTube algorithm to suggest this video to different traders. And the only way that can happen is by you liking this video, commenting on this video, and by subscribing to the channel. So I'm not here for monetization and all of that shit. You understand? So I've been trading for 13 years, and my mindset was always to elevate traders. It does not mean that I am the best at what I do. It's just that I have understand properly how the market works. And because I understand how the market works, whenever I meet a trader, I am not always in a hurry to teach, but all I want to do is to hear you. Once I hear you talk for a couple of minutes, I will know what you're actually missing. So now my job is to listen to you properly, and know the missing piece. So it is always easy for me to teach traders that are not yet profitable. I don't like use the word struggling or upcoming, because I believe nobody is upcoming. Once you are trading forex, you are no longer an upcoming. You understand? So it is easy for me to teach traders that are not yet profitable than for me to teach a total newbie. So that is why I actually made time to make a video for newbies on how to trade forex in 2025. So, But if you haven't find profitability yet, you're still struggling with, you make profit today, you have losses tomorrow. If your losses are still bigger than your profits, then I can help you. Believe me, I can help you. That is the easiest thing for me to do. All you need to do is to listen and listen. Though listening is hard for some people, and that is why we have just 5% of our profitable traders, and we have 95% of people that are still blowing their account. I can see someone commenting from Korea. Who the fuck is this man? So I think I'm not closing this trade. I am not closing this trade, but I'll be going off right now. I'll be going off right now. Yeah, man, I'll be going off right now because I have one or two things to do. So I'll be going live on Friday, Thursday or Friday again. No, I'll be going live during CPI. Yeah, I'll be going live during CPI. I'll be trading CPI live. So I'll need you to fund your account. Once you fund your account, just wait for my call. Now, if you don't have a Forex account, there's a link in the description to open the trading account. Something happened to me in 2015, January 25th. Go to your Forex factory and check CHF gapped down about 1,500 pips in space of 1 minute. Now, even those that were not even trading CHF, that's what they call correlation and relativity in Forex. It means one pair can be selling and another pair will be buying. Just because of the pair that is selling, it will be depending on the strength of the other pair. Now, in 2015, January 25th, there was a news release on CHF called Liberate. So I was buying USD CHF. The trend was bullish. But when the news release came, the market started falling aggressively. I had a stop loss, but my stop loss was not honored. Now, what happened was the market kept on tanking, got to my stop loss. It kept on going. I was trying to close manually. But it was not working. It was just order failed, order reject, till my account was 0.00. Lost everything. Funding an account was even easy then because of the exchange rate of naira to dollar. Like I remembered the first time I funded an account, $100 was around 12,500 naira. So $1,000 was around 125k in 2012. So funding an account then was easy, but Charlie, if that shit happens to you now, and it is not easy to get back to Forex after blowing your account. That's something a lot of people don't talk about. So if you don't want to experience such issue for the market to get to your stop loss and it won't honor your stop loss and to keep on tacking, I want you to use a good broker. Just this is not me promoting the broker I'm using. In fact, I have no what's it called? I don't have any personal agreement with them. I'm not dealing with them in any form. Yeah, but use the link in the description to open a Forex account if you want to be safe from such spillage during the news. And after that incident, my broker promised to refund. They promised to refund. They sent an email. Forex Yard, this is a perfect opportunity to drag your ass. They promised to refund, but I did not see anything. Nothing, man. Nothing. Absolutely nothing. They didn't do shit. So, and that was how I stopped using Forex Yard. Switch to market.com and Same. Someone said same thing happened with SNES. CPI they shifted my stop. Oh, during SNES, I think that is called spillage during SNES. As I mean, I said during SNES. On SNES during the news, um, they increase what's it called? They increase the number. Is it the amount of pips per trade? And it's not leverage. I'm trying to remember this thing. What they call it? It's not margin. It's not leverage. It's not margin. It's not leverage. It's not spillage. I've forgotten it. So, but all I know that during the news, in essence, sometimes you buy and you see your order at the top, right? I don't know if it has happened to some of you. On SNES during the news, if you place a buy order, you'll be seeing your position at the top. It's called. I'm trying to remember. Wow, my memory. Old age. Guys, old age is affecting me. It's not easy. Yeah, man. Someone says spread. God bless you, brother. Someone says spread. You're right. Spread. That's spread. So during the news, the spread is they will tight the spread. They will tight the spread like someone that is holding someone's neck. So whenever you enter a trade, during the news, the spread is always different. The spread is always different. But there's something I love about SNES. Compared to some broker, the spread on crude oil is amazing, and crude oil is one of my favorite position. I trade gold, BTC, USD, and crude oil. So, guys said spread. That's you're very right. You're very right. 723 pips. Now let me check something on 15-minute time frame on SAUSD. I think, is this a rejection? Are we going to see a rejection here? Okay. I doubt. So now this would be a perfect place to watch out. So if price close below here, now let me zoom in. If price should close below this place, it means it's going to clear this low here, then starts clearing this trend line liquidity here. So don't forget we have stop loss here. We have stop loss here from those that bought here. We have stop loss here from those that bought here. Stop loss in this place as well from those that bought here. So 1, 2, 3 liquidity, and the market does not joke with this. So on field inefficiency in the form of a value gap, the market will pull back. It's definitely pull back. So, but I'll be looking at this place. I'll be looking at this zone. Let me go back to 30-minute time frame, which is the time frame we're actually using. So I am not sure if the New York session has a lot of momentum to clear off this high. It's forest, anything can happen, but I am not sure if the New York session has a lot of momentum to clear up this high. You know what I'm saying? So I am not sure if the New York session has such, because we're far gone into the New York session. But all I know that there is now liquidity resting above this high here. There's liquidity resting above this high, and there's liquidity resting above this low here. Because now, if you sold here, definitely your stop loss will be here, right? Now, it means there is liquidity here. If you bought here, or you bought in the middle of this huge bullish candle, your stop loss will be here. It means so there's liquidity everywhere in the market. You just need to know which one the price wants to take. Now you build a setup around that. So you tell yourself, okay, now whenever I see this and I say this, I know that the price is about to take off or price about to clear this liquidity. If I see this and this, always use the word if, because the market is built on probability. Use the word if. If this happen, I will do this. If this happen, I will do this. Don't tell yourself this always happen every 1 o'clock. Nah. Now I see a lot of shit that they do this, right? They tell themselves around every 1 p.m. gold we buy. Around every 1 p.m. gold we sell. Bro, that's trust, that's shit. Trade what you see, not what you think. Trade what you see on the chart, not what you think. Now you can think it will happen and it won't happen. If you want to make money in the market, trade what you see. Don't trade what you think. Now, what you are thinking can be clouded with greed, with emotion. Now, if you are buying gold, your thoughts, you will definitely be giving yourself confidences, bullish confidences. You wouldn't want to accept any bearish confidences you are seeing. Why? Because you are already in a bullish position. So sometimes learn how to trade what you're seeing. Fine, we know the market has history of repeating past data, but don't just tell yourself every first of the month the market will buy what you said. No. You have to wait for certain things to play out. Tell yourself, if I see this, if this happens, I will do this. If this happens, I will do that. So that has been my that has been one of the strong edge that has been helping me in the market. Why? Because I always use the word if. I know market is built on, I know the strategy is built on probability, setups are built on probability, so nothing is 100% sure. That is why you need to repeat your strategy and your setup with same market condition. If this happens, if this happens, if this thing happens, I will do this. If this thing forms like this, I will do this. So if you can stick to those rules, you will start seeing profitability. And profitability is not a stage. Don't get it wrong. It is not something that you will get to and you just be there. No. Profitability is a continuous process. Profitability is like success. If you tell yourself, I am not successful, I don't need to make money anymore. See, in few months, poverty will start knocking on your door. Don't get it wrong. This pullback you are seeing here is not a bullish continuation. There is a candle formation that cements right onto a trader, but the end is destruction. Don't fall for it. You understand? There is a setup that cements right onto a trader, but the end. See, a bullish candle can become a bearish pin bar. So don't chase volume, chase setup. You know what I'm saying? Sometimes you just have to wait for the close of a candle to actually just have to wait for the close of the candle for you to actually know the direction. So, and this candle will be closing in the next 15 minutes, because this is on a 30-minute time frame. It means candle opens and close in a 30-minute interval. You understand? A 30-minute interval. So we have 15 minutes left, and on the 15-minute time frame, a candle just formed. Now I have to assess. Okay, now this is a nice bullish formation. It has an open, low, it has a high and a close. Now the low closed below. Let's analyze this candle formation. The low of this bullish candlestick closed below the low of this one. The high closed above the high of this one. Now, if you want to buy, your buy here, your stop loss will be here. Your take profit will be here. That will be a nice buy setup, but I'm not interested. I am not interested. Till price close above this high, I am not doing anything. So now this is like a range for me, right? I cannot cannot do this twice, right? This is a range for those that trade TROT strategy. That shit is gab, man. Sorry to say that, Ali Khan, you're a nice friend, but your strategy sometimes. So this is a range. This the low, the high. A lot of people want to buy here, stop loss here, nice. I don't have a problem with that, but I will want to see price take away this high and watch the volume, the momentum at which it's actually taking this high, so before I can actually do anything. So this is a nice range to trade. Scalpers, though, they can take use of this advantage, put their buy here, put their stop loss in this place. They will call this break and retest. You understand? It's this low, high, and a low. So they will be expecting a new high, right? So like a break and a retest. But still, I'm not convinced. I'm not convinced at all. So I'll be ending the live stream now, and I'll be training live again during CPI in the next couple of days. And I want you to subscribe to this channel. If you haven't subscribed, please subscribe. Click on the like button. Like this live stream. Leave a comment. And after this live, the video automatically will be uploaded to YouTube, so you can come back and watch from the beginning to the end. Learn one or two things.